And good afternoon, everyone. Futures Brizio here. It's about 4 p.m. on Monday, October 28th, 2024. Hope everybody's doing well. You know, it's been a little over a week since I made a video, so I guess I say this in every video. I apologize about that. But let's just jump right in. And, well, before we do, as always, make sure you smash that like button, subscribe to the channel. If you're just finding it the first time and any questions or comments, future topics, whatever, pretty much open to whatever, just leave it down in the comments section and I will answer every comment that's written in there. So, all right, so let's just jump right in. We'll just do a quick review here where we're at in a couple of markets, and then that'll be about it. So let's talk about natural gas, because this is a little interesting. So, as you guys know, I've said in the past that I like to look not only at the futures chart for a particular market, but also at the corresponding CFD chart, or which is basically the cash chart. And so this is the natural gas CFD chart, and this is on a 4-hour time frame. And I want to just point out two areas here. So let's look at this area right here first, okay? So this high right here at the top, this swing high, and also where price peaked out this most recent high, or actually this whole price action here coming up. So this area and this area, okay? So this was on October 4th. This swing high was put in. And this one was put in basically yesterday when the market reopened last night on Sunday. All right. So just keep this visual in mind about, you know, this big uptrend, pull down, and then price coming basically all the way back up towards this swing high. And now let's look at that, look at it on the futures chart. So here's the futures chart. Now this swing high right here where this green arrow is that October 4th swing high that I showed you here. That's this October 4th swing high. But look at the difference. On the cash chart, you remember the price came basically all the way back up to here, right? It basically rallied from off this low, came all the way back up, and then started going down. But look at it on the futures chart. This is as far as it went, and then it rolled over. So I'm just pointing that out because that's a really big anomaly. That doesn't usually happen. While there is some differences in these, you know, cash versus futures charts, it's not usually very noticeable. If you put the two charts next to each other with no labels on the same time frame, it would most of the time be pretty hard to tell which one was the futures chart and which one was the CFD. But in this case, there's a huge difference where this only came, you know, up to here and then sold back down. And I only point that out because, you know, this could have potentially looked like, you know, a change of character, and now we're start going up. And maybe ultimately it will, because you know, we're back down near these lows now, but maybe ultimately it will. But if you had been looking at the CFD chart, let's go back to that. You notice this arrow I have drawn here. Now, again, I'm not a huge believer or follower of, you know, imbalances or fair value gaps or whatever you want to call this big red candle here at this swing. But you can see what price did. It came all the way back up and came right to about the midpoint of this big red candle and then sold off. And you can see it, on this big sell-off, it broke structure. It broke this little internal structure right here, okay? For this last swing high, right? You can see we're stair-stepping up very nicely. We had this swing, we broke on this candle, all right? And now it's just sitting here below. I have this, I mean, I'm just thinking it's going to go down again. I don't know if ultimately that will. Let's take that off just not to confuse it. But, you know, this is pretty obvious, and this is pretty bearish here that it was going up, and then we have these two giant bearish 4-hour candles that take out recent swings. And you definitely could see something like this now where price kind of comes back up to some degree and then sells off. Now, again, I don't know if ultimately that's what's going to happen, But you wouldn't have really noticed that so much if you hadn't been looking at the CFD chart on top of the futures chart. Because again, on the futures chart, this would have looked more like potentially a change in character, and that we were just going to go higher. And, you know, you would have been watching this little correction here and thinking that, okay, it's just going to correct. It'll hold this area, and then price will go back up. And you would have basically, if you did that, you would have missed this apparent resumption of the downtrend. Whereas if you were looking at the CFD again, you would have said, huh, this is pretty interesting. We had an uptrend here. The structure was broken, especially right here. If you want to consider this the major swing point on this, the last major swing point on this move up, clearly was broken, and then price rallied all the way back to fill in an imbalance with this big, large 4-hour candle right here that had not been revisited. And then it apparently sold off. Again, you would not have seen that if you had only been looking at the futures chart. So I only point that out because you don't usually see this happen with such a discrepancy in the two charts. But in this case, it would have actually given you more of a heads up about a potential short opportunity. Now, you certainly could have traded this uptrend up, you know, back to here because we were clearly making higher highs and higher lows here, you know, from this point. You know, there could have been a couple of opportunities to go long in here. But to me, you know, just looking at what it's doing now, the larger opportunity was for it to go down. But, you know, we'll see. I could be completely wrong, and this, you know, blast back to the upside. But it's very interesting because, again, you just don't usually see such discrepancy between these two charts. Okay? So, again, if this holds, I would expect lower prices on natural gas, but we'll see how that goes. All right, so let's look at copper. Copper is a no-go for me right now. Here's the CFD 4-hour chart, and again, we have been trading inside this range basically since like the middle of last week, actually almost a week ago, with the exception of this little break right here and this little break to the upside. We've stayed inside this pretty narrow range, and we are still in there today, and we really have made no progress whatsoever. So I'm not interested in copper at all until something breaks. Where it's going to break, I don't know. You know, we had this last little swing right here before this low was put in. So, you know, is this the swing right here? Went down, made a new low, and then had a change of character with this high, and now we're just accumulating down here and then eventually pop higher? Or is this a more accurate swing high right here, in which case this just came up and mitigated this area, and then we'll, you know, chop around and then eventually break out to the downside and keep going lower? I don't know. So, you know, we'll see. But either way, I'm not trading copper at all until this plays out and kind of shows its hand. I determine what it really wants to do. And copper looks like that on the futures chart too. So here's the futures chart. Looks almost identical. Again, as opposed to the natural gas chart, which looked, you know, had a similar pattern but at completely different levels. This one almost, you know, pretty much matches up with the CFD chart. Okay, in terms of this this range that it's in is pretty much the same levels. Again, a little breach here, a little breach here. The question is really, again, becomes what is the swing? Where is the last swing high? Is it this area right here that put in this low? Or was it this one up here? And this is basically just part of this move down, not really its own little swing point. This is actually the swing. Because it makes a huge difference, right? Because if this turns out to be that it's this is the major swing, then this probably will keep going down. But if it turns out this is the swing right here, and we had a change of character, pulled back, chop around, accumulation, you know, the the large traders are just accumulating positions in here. Maybe we'll see a little manipulation below this line, and then it'll shoot to the upside. So I don't know which it's going to be. I'm not second guessing it. That's something that I'm not sure about. So I'm just going to keep an eye on it, and once it tips its hand, then so be it. Then I'll look to trade it again. So all right, and then oil. Boy, I tell you, oil has been really volatile. So at the close of last week, I had a long position that I closed on Friday, which I was glad I did up here, because we came up to this. We were trading down. We came up to this trend line. I felt like maybe we were going to go higher, although I don't really like this sideways chop right here. I don't always really consider this to be a swing, even though it put in a new low. This is more like potentially just manipulation, where the large institutions start buying, then they manipulate price down a little bit to take out stops, and then they run it back up and it goes higher. But you can see it did do that. So was this manipulation, or was this again just part of this larger move down? And this is really the swing highs up here, much like what I was just talking about with copper. And this is just kind of like just a little breather, but in this larger move down. Well, if this is manipulation, where they started accumulating to go long, they manipulated price, just popped it down below this range and then went back up. But then what happened right here? Well, what happened was a fundamental driver, which is it was a little bit of a respite from the escalating tensions in the Middle East between Israel and Iran mostly. And so when that kind of broke over the weekend, when the market reopened, it gapped down, and there was like basically a little pressure relief valve with oil. And the market left this huge gap on the chart right here, and it broke down back to new lows. And of course now we're sitting kind of back in the middle of the range again. But this is where the market opened. This 4-hour candle right here was when the market reopened last night on Sunday. And then we've kind of just drifted lower, and then we're about halfway back up through that range again. So if this was a manipulation area and price was going to go higher, it kind of blew that scenario up right here, because now it's actually trading back below this level. So I don't know. And again, it could be because the actual swing is actually up here, and as long as price, holds below here, then we're still in a downtrend. And if that's true, then actually we could move this down to here now, because this becomes our new swing, right? If this turns out to be right and prices continue to drift lower, then this becomes our new swing area somewhere in here. Whether you want to follow the trend line or not, that's not really important. You want to take the trend line off, that's fine too. So if this turns out to be the case, then again, it just turns out that this area right here was really nothing. It was just part of this downtrend. It was just basically part of this downtrend. This was all one move down, as opposed to, down, up, down, right? So instead of this being down, up, down, it's just one big move down, and then this is just chop. And again, it makes a huge difference of which that is going to be, because if it's one big move down from this point all the way down to here, and you just kind of ignore this, then then this makes sense, right? That this was just a pullback and then a resumption of the downtrend. If this was if this was its own kind of swing, like down, swing, down again, then this is just one of those times where, it just doesn't work, because even though it had a change of character right here where it took out these swing highs right here, it ultimately went down anyways. And look, that could be what it is. Although I will say, though, again, that a lot of times these sideways, choppy, range-bound patterns like this are usually kind of retail traps, okay? You know, where prices China chops around, people go down here, it breaks out, and we're like, okay, good, I'm catching a breakout for the next leg down. It goes down a little bit and then snaps right back and takes them out. You know, whether they have their stops here or up here, whatever, it goes up and takes them out, and it comes back to the real area to sell, which was in here. And again, for you fair value gap traders, there obviously is a potential imbalance right here. With this big red candle, that price came back into, you know, you can see on these highs right here, it chopped around a little bit, and then boom, it went lower. Okay, so the real, the real pullback areas to me are more of these sharp pullbacks like this, as opposed to these choppy, range-bound ones that basically move sideways and don't really get anywhere. They just kind of like I said, you can just clearly see the difference between this and this, right? And so this is what I'm leaning towards, this analysis, that this is just to be ignored. It was all part of just one smooth move down, came back, filled this imbalance on this big red candle, and now price is breaking lower to the downside, okay? So that's how I read this, and in that case, so if we go to the CFD of oil now, again, we have this basically the same scenario here. I'm just drawing this because obviously I'm not taking a short at this level. I'd have to see price pull back again, assuming that this becomes our new swing area. And that would kind of line up with, to fill in this gap, would probably line up with a retest of this trend line. So that's a potential opportunity to go short. If we go to the daily chart, again, just to keep in mind that we are playing in an area down here where there's a lot of previous resistance. If you look to the left, there is a lot of previous support area here. So, it's not ideal just because of the levels it's sitting at, but it doesn't mean it can't go lower. There certainly is, more lows further down here that price could, reach down here around, 64 down to $62 a barrel, somewhere down in here. So it definitely could go lower, but, this whole area in here does have a lot of potential support, and, crude oil can be really volatile because it's very subject to geopolitical events, more so than I think than natural gas is. So, you just have to really hold your breath with this. And I've debated just not trading crude anymore at all, just for that reason, because it doesn't always hold structure areas very well, and it can be a little bit dicey. But I think it's worth watching right now because I do think right now it's holding some good patterns if this turns out to be the case. And in which case I would again expect price to at some point rally back, have a bigger correction, potentially fill in this gap right here on the chart, on the CFD chart, to fill in this gap that formed yesterday, and then have price pull back, like I said, to fill that gap, which again may potentially line up with this trend line, and then as long as this area holds, even if it breaks through the trend line, as long as it doesn't take out this area, then potentially to look for, another move back, back lower again. Okay? So that's what I'm looking for with crude. And we'll see. Okay? S&P, again, I don't really trade, but, we just continue to move higher here. And again, this is our most recent swing. You can see price has really not done much today. It looked like it was trying to come down, then tried to go back up. So I think, we could potentially see a little bit of a push down here, but we'll see. But as long as this area holds here on this is the 4-hour chart again. To me, this is the most recent swing, pull back and swing here before it went up. Then I think, we'll continue to chug higher here. So But, we do have a U.S. presidential election coming up in just over a week, and this market, like a lot of the markets, is probably going to, consolidate a little bit ahead of that. So we'll have to see what happens. But I think, things like the stock market could potentially go into a little bit of a sideways pattern here as it kind of awaits what's going to happen, in the U.S. here with the presidential election. So, all right. So that's the situation here. And like I said, I really wanted to point out this natural gas thing in terms of the way the charts look. It's very, very curious. I can't remember the last time I saw one that had such an obvious differential between the two charts. And again, the overall pattern was the same, but the places that it reached to on the chart were completely different between the CFD and the futures chart. And again, in this case, looking at the CFD chart would have given you a potentially great area to sell from that you would not really have seen on the futures chart. Okay? And in fact, on the futures chart, you may have been waiting for a pullback to go long when actually the better way to go there would have been a sell position. So really interesting, and that's why I continue to flip back and forth and look at both of them, even though, again, 95% of the time they're going to look almost identical, and you may not get any advantage to one over the other, but in this case you would have. So there you go. All right, so anyways, guys, I'm going to leave it there. Again, please like the channel, subscribe. Any questions or comments, leave them down below. And I hope you have a good rest of your night, and we'll be back really soon. Okay, guys, take care.